Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. For this week, we'll be analyzing the markets as they closed on the 5th of October, Friday, 2018. We will be starting off with the S&P 500 E-mini futures market as usual. So this market over the past week actually saw a retracement back into the uptrend, which is an interesting development. For the past several weeks, we've just seen this very smooth and strong uptrend here, taking price further up north and closer excuse me, towards our longer term 3,000 big round number target. However, last week, especially towards the end of last week, which is Thursday and Friday, we saw a noticeable retracement back towards this all important horizontal support and resistance level over here, identified of course by this extremely important and major swing high over here created back in February, where the market actually tanked right after basically accelerating into the level. And of course, we've had a more recent incident where the market found very clear support off of this level. So a very clearly defined support and resistance level here. The market pretty much bounced off of on Friday. Interestingly, though, we're also looking at the wick on Thursday's candlestick over here as well. So even though we had two consecutive bearish days for this market, we wouldn't really classify this as a threatening pullback into the uptrend in terms of any kind of strong movement towards the downside. We're still pretty much looking at this as possibly just a pullback to this area of support and resistance level and just this former low over here, and just continue to look forward to the market continuing its way further up and closer towards our mid to long-term target of 3,000 for this market. Actually, if you notice, on Friday the market pretty much closed within the range of Thursday's trading activity. That in itself is a very good sign for us that we could potentially have some bullish implicit divergence kicking in here. Just a quick reminder: we refer to implicit divergence as a market that is really struggling to close past prior periods trading range. So for example, if you look at this instance over here where the market initially bounced off the this support and resistance level over here, you can see how several candlesticks before the one that actually pretty much touched this level and the market was able to rebound after that, you'll notice that the candlesticks really weren't being able to close below the lows of the prior candlesticks, and that in itself is what we call bullish implicit divergence. Basically a bullish indicator and an indication that the move towards the downside may not be as strong, or is definitely not one that would pretty much threaten the existence of the longer term trend in place. So we're looking at the same situation over here. Obviously the ranges on the candlesticks themselves seem to be a lot bigger, which make this pullback, this more recent pullback into the uptrend, appear as threatening, but really we wouldn't be very concerned unless the market actually moves right underneath this area of support and resistance here. And we see on Monday, say for example, a very strong close underneath this level, and if the market pulls back, it's not able to push right back up and just basically holds as resistance at this level, and we see a continued push towards the downside. That would be something that would possibly cause us to rethink about whether the market is ready to hit the 3,000 big round number just yet. But the developments so far here just make us continuous believers in the probability of the market hitting the 3,000 big round number in the near future. Okay, so the next market we're going to be looking at here is the light crude oil futures market. This was another extremely interesting and an important market to follow last week. Of course, if you recall our analysis for this market from the prior week, we have been talking for a while about the importance of the $1.74 price level here, which is acting as a very long-term and a crucial area of support and resistance for this market. Of course, in the more recent past, we've had very strong resistance off of this level over here. And all of this build-up here underneath the $1.74 price level, the market sort of breaking past all these highs over here, then using this short-term form of resistance as short-term support and continuing very strongly towards the $1.74 price level, of course just had the market primed to at least give a serious test to the $1.74 price level. And we saw that, of course, last week In fact, we saw the market close strongly above the $1.74 price level. Interestingly, though, the market really wasn't able to sustain that momentum at all. As we know is usually the case when the market is accelerating into a level instead of actually building towards an actual breakout past the level. So for example, if you see the price action over here, we had a similar action in terms of the market actually accelerating into the $1.74 price level and then not being able to break that level at all and just dropping down just as hard. We don't have an exact situation over here. We did have sort of a build-up underneath the $1.74 price level, but we would have just preferred to see this further up, maybe into this area here, for us to be more confident of the market trying to actually break the $1.74 price level and continue higher above. And so it's really no surprise for us at all that the market here sort of just pushed right back down. Just about as hard and pretty much closed at the $1.74 price level. Well, not technically, we still pretty much closed a few ticks above the $1.74 price level here, which technically speaking still puts the $1.74 level in contention to potentially hold as support and allow for the market to continue higher. But just looking at this entire activity here above the $1.74 price level, we wouldn't really classify this as a more smooth kind of a breakout and a slow rounded pullback towards the level where price holds a support and continues higher. We're still looking at this as a very VIPy kind of a price action, volatile period of trading activity above the $1.74 price level. And so we really wouldn't be surprised if the market, of course, drops underneath the $1.74 level here early this week and just continues its way further down. A major reason, of course, with that for us to have that kind of an expectation is, of course, the fact that the $1.74 level here is a very, very important long-term area. Just as a quick reminder, if we zoom this chart out right here, you can see why price could possibly be so volatile above the $1.74 price level. Of course, this area lines up with a very long-term area of support and resistance for this market. We've had several extremely important swing lows way back in the past off of this level, and now that the market is trying to approach this level from under, it's obviously unsurprisingly acting or finding a lot of resistance off of this level. So yeah, zooming back into the more recent price action over here, once again, even though we have not really seen the market actually close underneath the $1.74 level here technically, we're still looking forward to more weakness for this market going into this week, unless the $1.74 level surprisingly acts as support and allows for the market to continue to take further up and away from this long-term area of support and resistance. Okay, so the next market we're going to be looking at here is the gold futures market. As you can see, we really didn't have a lot of trading activity here for this market in terms of any definitive, decisive moves either up or down. The market just continues to be in a sideways phase, which was, to be honest, a little bit of a discouragement for us, because if you recall our analysis from the prior week, we've been talking about how the fact that the market seemed to have broken out of this wedge pattern over here towards the downside could make for an interesting development in the sense that if the market had pulled back and found resistance at this rising support trend line that's part of the wedge pattern over here, we could see the market actually resuming its more longer term downtrend over here and possibly test this more recent swing low as well. Well, none of that really happened last week at all. The market, well, did sort of pull back towards this level, but we really didn't see or didn't really experience the kind of resistance that we were expecting for the market to find here if it was really getting primed to continue on with the more longer term downtrend. In fact, we're seeing that the market is still pretty much caught up in this tight consolidation phase here, where nothing much is happening in terms of any kind of decisive price moves at all. Interestingly, for us to be really enthusiastic about this market, we would actually be looking forward to the market trying to test and possibly either break this level over here, the support and resistance level, towards the upside, or we're looking for the market to make a definitive move towards the downside for us to consider the possibility of the market trying to resume the downtrend over here. So unless we see one of the two possibilities here unfold, we just expect for this market to continue to be just pretty much sideways and not very active in terms of any vertical price movements. Okay, so next up we look at the euro currency futures market. Another market where really not a lot happened last week in terms of any major developments. If you recall our analysis for this market from the prior week, we had talked about how the market pretty much finding resistance at this level over here. Of course, we in the past has had several occasions where the market found resistance at this level, and then once again in the week prior to last one, we saw the market pretty much rebounding off of this level over here. And in our last week's analysis for this market, we had talked about how the market rebounding off of this level opens up the platform here for the market to potentially go right back down towards the 1.16 level and pretty much enter into yet another phase of consolidation. And well, that's exactly what the theme was for last week as well. We saw the market sort of continue to trickle further down and pretty much closed at the 1.16 level over here. You can see that for the most part this level has been acting as support, but really the last time that the price actually broke underneath the level, it wasn't able to sustain that break at all, and the market rebounded right back above the level. Once again, it acted as support and just allowed the market to consolidate pretty much above this level. We see that theme pretty much continuing on here. What would really make an interesting development for this market would be if the market actually pushes right underneath the level, closes strongly, and uses this level as resistance. In that instance, we would then possibly expect for the market to test the swing low over here and maybe even continue with the more longer term downtrend theme over here. On the flip side, if the market is to continue to find formidable support at the 1.16 level over here, then we would expect for the market to at some point maybe break past this major resistance level over here that it was about to do, we believe, the last time that price was here. And so really, if we see possibly another retest of this resistance level and the market actually is able to break past this level and use it as support, then we would potentially be looking forward to a market that would have then broken past a very extended period of consolidation over here. Okay, so finally we look at the 10-year Treasury note futures market, possibly the most interesting and the most happening market for us over the prior week. If you recall our analysis for this market over the prior week, we had talked about how the market breaking underneath the 119 price level here that has majorly been acting as a resistance level for this market over the more recent past, or rather we should say in this entire period of consolidation that this market has been caught in over the more recent past. The fact that the market had broken underneath this level and was trying to find resistance off of the 119 level, we had cited as an interesting development, because that could potentially, that we said was a potential indication that the market could now continue its way down. Well, that's exactly what we witnessed last week. The market really didn't hold at this area of support here at all, which is the more important sort of a long-term swing low for this market. Instead, the fact that the market pretty much held at the 119 level here was good enough for, or rather was a good enough reason for sellers to continue to pile in their orders into the market, and so we saw the market pretty much plummet last week for the most part, which is a very interesting development, because this means that if this momentum is to sustain itself and the market just continues to further move towards the downside here, we could well be past this entire period of consolidation and pretty much in the process of resuming this more longer term downtrend that we had going pretty much before the market entered into this phase of consolidation. So we will have our eyes on this market for sure, and we're looking forward to more bearish activity here for this market going into this week, if this break underneath this entire period of consolidation is a real one. On the other hand, really, if we see the market not doing that and sort of pulling right back above towards this level, that would be a disappointment for us, and that could potentially mean that the market here is possibly going to continue to trade in this period of consolidation over here.